Just as President Trump officially signs an executive order allowing Bitcoin and crypto into your 401ks, imagine having Hugh, who just discovered a stock that could explode 100x, according to its CEO, as Ethereum surges. Now, this is not really a video for crypto fans, although if you're welcome to watch. I'm a stock investor. I'm not hugely into crypto, but this one caught my attention and I'm going to do something about it. This is potentially a stock that could turn investors into millionaires, or at least kittens into millionaires. And it is backed by Wall Street analyst and sort of legend who sees Ethereum flipping Bitcoin and hitting a $40 trillion market cap. So if you are hunting for stocks with massive upside potential, this video reveals why there's one particular stock, but also just generally Ethereum Treasury companies, and I'll give you a couple of those, which are publicly traded companies that are obviously stacking Ethereum for explosive growth, making them accessible for regular investors and kittens. And it's for those who seek high reward plays without all the complexity of wallets and God knows what. So we're going to break that down. I'll tell you what I'm buying, and if you want to take it one step further and you're really serious about your portfolio, I'll do one better for you than the next few minutes. A free live session on Saturday to shake you up and to make you into a better investor. You can grab yourself a free seat for that at felixfriends.org/training. First link down below in the description. But let's jump into it. As Tom Lee says, I think the upside case for Ethereum is actually higher than Bitcoin, which did 100x. You know, could Ethereum do 100x, he says? I think that could happen because there is probably a significant probability that Ethereum could flip Bitcoin as well in terms of network value. Now, that was a quote. That was not me saying that. And we have more than a few catalysts. Ethereum is the second most popular crypto, still well below its 2021 highs. You can see it on the chart here. It was trading at about, what was that? 4,700 back then. And it's being mainstreamization, if that's a word. Literally, I see Ethereum all over my X feed. It's on every news show. It's consistently there, whereas no one was talking about Ethereum about a year ago. Peter Thiel, Tom Lee, Bill Miller, the Trump family, etc., they're all invested and or are public advocates for Ethereum. And Ethereum serves as the backbone of the blockchain. It is a useful crypto. And then we have these layer 2 scaling solutions, Base and so on. Look into those if you're interested in that. And they're growing rapidly, and they're all built on Ethereum's layer, which is driving more network usage. Ethereum is the blockchain most traditional finance players are experimenting with, think big banks, for tokenized real-world assets. It seems to be the most useful crypto out there. So what about these treasury companies? Well, we have firms like Bitmine, which is Tom Lee's baby. The ticker symbol is BMNR. We'll look at the charts together in a second. We're just doing something extraordinary here. They hold huge Ethereum reserves on their balance sheets. They treat Ethereum like a high-growth asset to boost stock values. Their advantage over buying Ethereum directly, well, they compound your exposure automatically. So there's no need for wallets or exchanges. These are easy entry vehicles for crypto upside with some built-in protections and yields, like dividends a little bit, except they tend to keep them. So they profit by holding Ethereum, which rises with demand from Wall Street's tokenization, stablecoins, and AI. But the real edge is actually staking. So Ethereum's proof of stake system lets them lock in Ethereum to secure the network. And that earns you about 3% or so annually in essentially interest. A bit like a bond interest, but it's paid in more Ethereum. And this yield funds buying, guess what? Buying more Ethereum. So it sort of creates a snowball effect. Everybody wants the 3%. Everybody wants Ethereum because everyone else is buying Ethereum. Therefore, the prices go up, and you get the idea. And therefore, these stocks, and I've got 4 here for you that I'll walk you through, they also trade at premiums above just pure Ethereum because there's rapid growth, there's high liquidity, and there's scarcity. And it allows these companies to raise capital very cheaply. So they can just issue some shares or some sort of preferential share. And as long as people are willing to buy shares in BMNR, there's basically free money for these guys to then buy Ethereum As long as Ethereum keeps going up, they benefit from that capital expansion, which is essentially profit, and they get the 3%. So Tom Lee chairs Bitmine. It is the largest Ethereum treasury company out there. They're aiming for 5 or 6% of all Ethereum out there by next year. And he launched this in July 2025, and he's already bought about $2.9 billion of Ethereum, which is about 12 times faster than Michael Saylor's Bitcoin pace at MicroStrategy. Just strategy now, right? They lost the micro on the way. Sold it. So Lee is literally dead serious about grabbing 5% of all Ethereum by next year, which would be 20 billion at today's prices. Why? To lock in Ethereum below $10,000 before it moons, as this crowd likes to say. So in his words, Ethereum is one of the biggest macro trades over the next decade. We want to get as much Ethereum at 3,500 or whatever makes it, before it makes its step function gain. And he adds, MicroStrategy delivered 30x total returns. Ethereum treasuries could triple whatever Ethereum could do. So say Ethereum goes up 100x, right? Which seems absolutely absurd. But then you got to look at, well, it's already up 140,000% since it started. Bitcoin's up some crazy number as well, 25,000%. So if Ethereum literally hits 100x, Bitmine becomes one of the world's most valuable companies with a sort of a sovereign put. The US government potentially acquiring holdings for national reserves, which is a rumor that's being spun out there. It's like Tom Lee said this. He said once MicroStrategy, which is the Bitcoin Ethereum company, has 1 million Bitcoin, they have a sovereign put. It's probably difficult for the US to buy in the open market that many Bitcoins. MicroStrategy might be an easier way to acquire them. So the same is true for Ethereum treasuries as Wall Street builds on Ethereum. Now, there are a couple of other stocks other than just BMNR. Let's have a quick look at the chart here, and let's apply our usual Wall Street-honed rules to these stocks, because at the end of the day, any chart is just a chart, any stock is just a stock, doesn't really matter what they own. So what's the good news? We're above the 150-day moving average line. Yup. We're above the 50-day moving average line. Yup. Right? Pretty good. Now, there is a bit of a sort of resistance kind of a zone here, that sort of wedge that we need to get through, and we're starting to do that here. Volume is looking very, very nice as we're moving higher, and that's important. So this actually looks pretty decent from a charge point of view. You then have, and these are all stocks that are easy to buy for American investors, so no like really random stuff. SBET, SBET, SharpLink Gaming. They essentially blend gaming with Ethereum staking for yields and growth. One of the real social media favorites at present. It's looking a little bit more risky, though, given some of the crypto people I follow, they are absolutely gung-ho on this one. Nice little consolidation. We're coming out of it with increasing volume. We're still below that 50-day moving average line there, which sits at 25.19. Above that would be a little bit of a safer play, typically speaking, and then we need to take out the resistance here at about 40. But yeah, these potentially have some tremendous upside. We also have, and of course, risk, so you don't just run out and blindly buy something because I'm talking about it. We then have BitDigital, which is ticker symbol BTBT. They mix mining and Ethereum holding for a little bit more diversified upside. And that stock is also above its key moving average lines here. The 150, the 50, dropped a little harshly yesterday on some significant volume there. And what I don't really love is that we've got these 2, now 3 highs. So we're creating a little bit of resistance here in that general sort of $4 zone or thereabouts. So not as much of a fan of that one in terms of chart. And then we have BTCS. They focus on blockchain, again, with a bit of a treasury play there, BTCS. And you can see all these stocks move crazily. Things that move 111% in a day also tend to come down 90% in a day. So you got to be prepared for that. And yeah, so a lot of people making a lot of money out of this, trading these, but you got to really think about, is this something for your stomach lining, right? These are available through all the major brokerages, which is what I checked. So what is this all about? It's essentially a bet on Ethereum sort of 2017 Bitcoin moment. If you zoom out 2017, Bitcoin was trading at about $1,000, right? It's $116,000 right now. And that's what Tom Lee calls it as well, the 2017 Bitcoin moment. And Wall Street does seem to be waking up to this. So his warning is this: Ethereum at 3,600 is kind of ridiculously undervalued. By the year end, it's not unreasonable to think 7,000, even 12 or 15,000 could happen. So if you're a stock hunter and you're chasing those 10, 50x, 100x winners, these guys could potentially deliver that for you. And also some real risks. By the way, there's a reason a lot of people talk a lot about crypto. Crypto is unregulated. The SEC does not treat crypto as securities, and therefore you can make much bolder statements about Ethereum than you can about any single stock out there, which is why a lot of people like pumping it, because it's just legal to pump it where it isn't legal to pump stocks. So let me tell you what I'm doing. And I'm not a crypto bro, but I do like to buy what Wall Street is buying. Why? Because, well, it's what's given me a lot of freedom. So I like the fact that we're seeing increased volume in some of these stocks. Right? I like the fact that Wall Street is paying attention to these. And I think, especially in sort of a summer vacuum, which is where we are right now, there is a reasonable argument to be made that a lot of my hedge fund friends are going to be chasing whatever goes up the most. So I apply the same rules to this as to anything else. Join me on Saturday to learn more about those rules, which I learned from my Wall Street mentors. But ultimately, we follow the money. So we follow the volume, we follow the movement. SBET is the one that is pumped and talked about the most by some of the people that I respect the most with good track records. So that's definitely one to look at. It's, as I say, it's a little risky right now, but then these things will always be risky. So what's the smart thing to do? Well, don't chuck all your money at this. Don't buy it, because I'm thinking about it. Say you put 1% of your money into this, right? And say we got the 100x, right? Well, then the 1% would in theory become 100% of your portfolio, or like a very large percentage. But what if they were wrong and the 1% goes to mad? Well, then you've lost 1%, which means your life doesn't change, right? So small is beautiful in growth stocks and high risk things. So don't go all in on the latest thing. That would be my advice to you. And if you got some value out of this, join us for the Saturday training, which will shake you up to your core and deliver you some real value, which is always my intention. felixprehn.org/training. We've got 1,000 free spots over there. So I wish you all the best. Take care. Hedge funds and even some Congress members and their very own CEO have been scooping up shares of this very stock. So Hamish tells me, who does all the research around here now. So now you know why this channel is run the way it is. He's very cute, and he's named Hamish because he's ginger, isn't he?